Hey, it's Rick. It's Saturday, March 4th. Um, Quite a change this week. Quite surprising week. For those of you that watched last week's video, the risk model was totally red except for the 200-day was still flatlined. And this week it's gone completely flipped over and everything is green now. The 200 is still flat, but could soon start turning up. So quite a dramatic change. Let's just look. I pull up the SPY and let's have a look. This is where what we looked like last Saturday, or when I last did the video. It was looking pretty ominous. Things were down. We're below the 200. Yeah, I'd recommended cashing up, and I was prepared to go to all cash if things got any worse. I think at the time I was about 40% invested. But fast forward the video a week, and here's what happened. Monday started off, wrong chart. Monday started off with a nice gap up, but it quickly failed and closed right near the low. So that's gave some promise and then sort of gave it back late in the day. Tuesday, again closed right at the low. Indicating things might go lower the next day, and sure enough, we did. So I took out this low from Friday, and that was a danger signal right there. I was getting lower, I think, can't remember, but I got stopped out of a couple of things, and my positions were down to like 25%. But the next day, it actually opened lower. I'm going to go to a 60-minute chart and show you what happened here. And I got much more bullish for short-term trading on this day and started to load the boat. And fortunately, that worked out well and loaded the boat a bit more today. So we had a very impressive rally. And this is what it shows like up in a weekly chart on bigger volume. Bigger volume than average, and it's encouraging to see that at least in recent weeks the big volume, above average volume spikes have come on green days, or green weeks rather. So yeah, we could be turning a corner, but let's just show you. It shows up better on a 65-minute chart. So I like to draw these boxes around ranges. So these are this goes back to beginning of February. And this was the box for the most recent week. So here's where we ended last Friday. And you can see we gapped up in the morning, but then just sold off all day and closed down near the lows. So glimmer of hope here, but the institution sort of rushed in and said, not so fast. Next day, sort of mushed around, but then right near the close, big, huge volume, and it sold off very sharply. Next day, opened lower and took out this low from Friday, which was not a great day. So this day, I'm very nervous about positions. And then the next morning, sure enough, it opened down below, quite a ways below, but then ripped higher. And then paused for a little bit and then ripped into the close at the end of the day. And it ended up here. And then to Friday, we just opened up and then just kept going straight up on steady volume all the way. So yeah, quite a dramatic change. It shows that there is a bit of a character change happening potentially. Although I always look to the left on the chart, and I can see there's a lot of overhead resistance here, a lot of sellers in here. So it's not going to be, we'll go back to the daily. Let's move this out a bit, or actually go to the weekly. It's not going to be a straight run up, back up in here. There's just a lot of stuff that we got to chew through. So I wouldn't be rushing out to load the boat quite yet. If you're a longer term investor, we only now have one close above the 40-week moving average. So my rules say 2 before you get too aggressive. But it might be time to put a toe in the water and maybe 25% in indexes. But it's definitely going to be what I call a stock picking market. We still could get some chop. I fully expect this is just going to chop around for several months. As I keep saying, with this debt ceiling issue in the U.S. is going to pose a bit of a strain on market participants. So, but in case we're wrong, you should have some exposure to the market, 25%, maybe even 50%. I'd be inclined to do that earlier rather than later, because we have a clear line in the sand here. If the market closes below where we close this week, all bets are off. It should be back in cash. And this is really just about, I'm guessing it's going to be around 2%. Oh, 3.3%. So, you know, getting fully invested would be a little too risky, but certainly half your account. So if it does just flip around and takes out this past week's low, and you get stopped out, you sell. The hit to your portfolio is only like 1.6%. So not a big deal. That's like, you recover that in a heartbeat. In fact, my account was up 1.1% for this week. So you can do that really quickly. So as I say, I expect some chop for some time, but that's not to say if you're there's not going to be opportunities out there. It's really going to be a stock picker's market, and how I would show that is if we take this chart and we go back to, this is the weekly again, to the beginning of 2022. Where we are messing around here. Yeah, this is close enough. And this is the closing price of the S&P daily, going back to the beginning of 2022. And you can see the trend is it's not rocket science. You can just draw a straight line there. So what you want to be looking for is stocks that they're not just following the market. Like if we go to the big ones, we go to the best Apple, for example. At the chart of Apple, well, it's actually from this point here. Yeah, it's pretty much followed exactly that line. Amazon, from this point here, it's just followed, it's straight down. Actually, even worse than the market. Google. So you get the idea. You know, go to some Canadian stocks, BMO. Plotting from this line here, it's basically following the market. So as I keep saying in previous videos, you want market returns, you just buy market stocks, and unless you have stops in place, you're going to suffer like most people did in 2022. What I would encourage you to do, I'll just quickly, without belaboring the point here too much, these are my open positions, and just compare the weekly charts. So here's our starting point. Let's just roll this back. There we go. So our starting point's here. This has gone from here to here. That looks a little different. Next one is DGII. Has gone from here. Oops. My drawing tools are not really great. We went from here to here. So it's going in completely the opposite direction. GVA, you get the idea. So we started, actually this one is, went from here, and it's only up a little bit, but still a better direction. HWM, yeah, we've gone from here to here. I think you get the idea. So, you want to focus your attention on stocks that look like this and not ones that look like that. And you'll do way better off. It just, I mean, people say, why are you buying at the highs? It's just you have a higher probability it's going to go higher when and if this market turns around. And let's say this thing continues straight up. The odds are very good that these stocks that have been going up are going to go up even faster. They're being held back to some degree by this overhang in the market. So they're going to go up even faster. So that's why I would encourage you to search for those. And it's not really difficult to do. It's finding the stocks to buy that is not really the hardest part of investing. To me, it's position sizing and risk management is the critical part of it. So when things don't go as you expect, you just get the hell out. You have to have discipline. So that's it for this week. We'll see what the next week's going to bring. I don't know. Go back to look at the QQQ. Yeah, it could chop up into this zone here, but I think it's going to be a choppy week, choppy couple of weeks. But as I say, there's going to be lots of opportunities on the stock side of things. Okay, that's it. That's all. Have a good weekend, everybody.